Hey everyone, welcome back to another Market Open live stream. So we got a few things today. Bank of England raised rates by about 50 basis points. Kind of expected news, so nothing here. And I think an interesting thing that is something the suits are starting to talk about again this morning is that the yield curve is pretty dang inverted right now. Like, oops, that froze a little bit. There we go. You've got the 10-2 yield curve inverted. You've got the steepening or the flattening rather of the Powell curve. Basically, all these curves are going down in recessionary levels. And what's really interesting about that is obviously there's some debate about whether or not we actually are in a recession. And I mean, so far, the bond market has technically been correct. I mean, the 10-2 yield curve right now is at the lowest level that it's been. Actually, let me go back here. Certainly in the last year, but I'm going to go back 5 years. Let me see it in the pandemic. Wow, it's lower than it was even in the pandemic. Here, take a quick glance at it right here on screen. Look at that. Lowest level of the yield curve in certainly in the last 5 years. I mean, it's wild because you're really uh you're really seeing a really steep inversion, and very few people are talking about it right now. And one of the reasons it's a concern that at least suits on Wall Street are talking about, I'm just wearing a suit at home, is that you have this belief that if we get any kind of miss in CPI data, you are going to see a nice fat steepening of that yield curve. And we get a steepening of it, then you're going to get some pain potentially in the stock market. At least that's what folks are saying on Wall Street, something to pay attention to. So I really think the data that we get 6 days from now is really going to be something that either creates a lot of nervousness or a lot of confidence. I don't know. I don't know what it's going to be, but I know that expectations are that month-over-month data is going to come in at 0.2%, and I just don't buy it. I'm like, I don't know. I don't know. I mean, that'd be nice. I do expect inflation to go down, but that low, I don't know. I don't know. We'll see. So that's something big that we have to pay attention to. Another thing that's kind of going on in markets right now is there's a lot of anger, at least from general population, over executives laying off people like crazy. And this is a stock market show here, and I hate to say it, but I feel bad for people who lose their jobs. But that's unfortunately capitalism. Now, a lot of people hate capitalism because of that. But in a recessionary environment, the best thing companies can do is lay people off and do more with fewer people. That does put more pressure on the people who are left. It puts organizational pressures in. I mean, Robinhood's reorganizing. Credit Suisse is talking about restructuring. You've got layoffs or hiring freezes at all of the mega tech, and it trickles down to almost all companies. So it's perversely good because you don't want to wish that anybody loses their job. But on the flip side, human capital is extremely expensive. I mean, I would venture to say that most businesses fail because of labor costs. It's so expensive. You pay one person, just as an example, you pay one person $100,000. It's not just $100,000. It's the fact that you're paying insurances, payroll taxes, insurances on top of insurances, health insurance, right? Workers' comp. I mean, once you add all this stuff together, and then, of course, other fringe benefits, whether that's matching, contributions for retirement, or here's a new computer or whatever, all this stuff adds up. You pay somebody $100K, probably adds up to about $150. And so that extra 50% is very frequently forgotten. And so that really, when you scale that up to businesses that have thousands of employees, and you look at Robinhood, where their user base, shrunk 9% sequentially, and they've got thousands of customer service reps because somehow Robinhood thinks people need to be able to talk options at 2 a.m. I don't know. It's stupid. Less people are going to be calling in bear market, so you need less people in customer service. You clean up. This uniquely, though, this double recession that we've gone through or are going through it will be really incredible in the longer term for these companies, in my opinion, and shareholders, because you've got a double weeding, right? You've essentially gotten rid of people during COVID, and now you're getting rid of people that you overhired. You're going to be coming out of this pandemic and then post-pandemic crisis with, I think, some of the most efficient companies in the world. So I'm very, very excited about being a long-term shareholder in a lot of these companies. Anyway, but that doesn't mean that in from the social realm there isn't going to be a lot of chastising of companies. There's definitely going to be a lot of that. But then again, that'll never end. I mean, just look at Elon Musk and the drama that he constantly has to go through. It's like sometimes I'm like, oh, I think the hate must be bad, and it's like, but then you look at Elon, it's like, oh no, that's do we still have the button? Let's see.
The House of Pain.
Yeah. Anyway, okay, cool. So what else do we have? We've got we talked about the yield curve. Oh yeah, so China's I see you, Miss Mary. Yeah, Miss Mary here says there are always pros and cons with any system. However, capitalism has lifted more people out of poverty than any other system. That is so well put. That's really well put. There you go. Boom. Throwing that up on screen. I like that one. That's a good one. You're right. All right. So how many people is China lifting out of poverty? Well, it depends if they're riding on the DF missiles. These are called the Guam killer missiles. And these are missiles that China has also been using in their recent launches. They just launched 11 into the waters north, east, and south of Taiwan, which, given that China is to the west, is making a lot of people wonder, like, if the missiles landed here and China's here and Taiwan's here, did the missiles go over Taiwan? Which is really concerning if they did. Who knows? That's unclear, but 11 missiles have launched or have landed in the waters to, again, the north, east, and south of Taiwan. They are definitely fulfilling their promise of military exercises between the 4th and the 6th. They said they were going to do this. Some have landed off the coast of Japan, which is really weird. And there's some concern. Well, I mean, this was the original concern that we had, was that we would see some of these missiles land and the military operations occur relatively close to Taiwan and what's deemed to be their territory. But then again, China does not respect that. So it's no surprise that China would potentially, hold exercises within that territory. Oh, how do you flip things? I've never done that before. I accidentally just hit the wrong button in preview and it flipped. Undo vertical flip. No, stop. I just want to show everyone the screenshot. Flip vertical. What the hell? Okay. I've never done that before. There we go. Got it. Okay, good. Yeah, because I want to show you all the Taiwanese issue. So first of all, here we go. This is where the missiles have landed today. And this is where the military operations are expected to be occurring. And you can see the blue line there, Taiwan territorial waters, and the red boxes where the military exercises are expected to be conducted. Kramer says now's a good time to buy gold. Steve, you're always into the commodities. I don't know, man. What's your opinion on that? So let's take a look at the gold chart. I haven't looked at the gold chart in a hot minute. Yeah, that's what I thought. You're the most pro gold person here. I know. That's what I thought. Well, that's okay. It can be transparently gold bullish. So here's IAU. This is in pre-market. Got a little bit of a rally here. Going back to day, and I'd like to know the thesis too. Remember, I did my little gold trade over here when I saw this wedge formation. I bought somewhere, what was it, like 32 or something? No, I don't think I ever got that low. I don't remember exactly where I bought. I think it was somewhere over here the first week of February. And I didn't get out perfectly, but it was on the 24th, I think it was. Yeah, over here. This little spiky that we got there right in the morning. So it didn't play perfectly, but still better than where it is now, which in theory makes you wonder, like, yeah, okay, maybe is there an attractive entry point for gold? But I don't know why. I mean, gold hasn't necessarily outperformed in recessions. Steve says, I think it is a good time as we are entering a period of high inflation and slowing growth. Okay, that's fair. I mean, yeah, if that would be interesting. How did gold perform in a high inflation environment and a recession? We could probably look back towards the 70s, which I doubt Weeble's going to give me data to. Yeah, no. But well, then again, I'm also looking at IAU. But the downside risk of that would be is that if inflation goes down, like actually meaningfully goes down, then you could be in a recessionary environment with low inflation, and then you're kind of just in your typical post, 80s recession. So that'll be interesting. But yeah, I would say take a look. I would look at the 70s or from 2003 to 2011. Okay. Let's see if we can get like a historical gold price chart up. Gold price chart. Oh, okay, yeah, I mean that's actually pretty easy to look up. Okay, here we go. So here's a gold price chart. This goes all the way back to, the Great Depression. Look at that. Oh, I don't want it to zoom in. But anyway, here's I'll just hold my finger on it. Here's the Depression. How interesting. It's really after the Depression. You kind of got this gold rally here. Big gold depression. Oh my gosh, look at that. Gold went down to $270 for a period over there. That's wild. But anyway, yeah, then you get this 70s. This is also when we left the gold standard, right? So we have to remember that during this period of time, there was a massive lack of confidence in the dollar because we had just left the gold standard. Prices were going up like crazy because finally we removed price ceilings, which then the market had to get back to an equilibrium. So you got this insane inflation, and people thought it would continue forever until we got Paul Volckered. So I don't love this environment here as much of a comparison because we do have this substantial precedent of inflation expectations being unhinged here. Now, if I go here, it looks like we do get a rally here during the dot-com bubble, and really the exuberance through the Great Recession. But how interesting! Look at the performance. Even though gold had a little setback during the recession, it still outperformed substantially until basically the bottom of the real estate market. How interesting! So the real estate market bottomed in about 2011. And but I don't know if you have a correlation there. You have this run up on fears of recession over here in 2019, which is so weird. And then, of course, the COVID pandemic, you had a brief surge. Yeah, that is really interesting. I'm going to zoom in a little bit more. So you look, this is the area to study because we didn't have high inflation. In fact, if anything, though, you had crazy growth in the mid 2000s. I don't know. It's not something that I could make sense of. Oh, but this is also, why is it inflation? I don't know. Oh, that doesn't make much of a difference. Okay. Anyway, I don't know. I'm not much of a commodities person, but it would be very interesting to try to explain the excitement of the dot-com era. But then also, why did we see this decline here? Now, if that's around 2013, that's also when we kind of started, when QE ended, or when they started that sort of taper tantrum and started tapering, I should say. QE like never ends. So I don't know if anything aligns with that, but whatever. Like that I don't have the answer to that one. I think it's very interesting, but if somebody else does, feel free to leave a comment there. But those would be my initial reactions. So what do we got here? Let's look at the pre-market here. We have 30 minutes to go until the market opens up. Coinbase is up 6.5%. So you know what's wild here is Cathie Wood sold like almost $70 million. It was like 1.3 million shares of Coinbase. And I feel so bad for her because I'm pretty sure it was like July 26th. Where was it? July. Yeah. It was right. Hold on. Here, I want to say. Yeah. And you even get this massive volume spike too. Yeah, there's your Kathy volume spike. And it's a big bummer because that was a bad day. It was down 15% that day. Holy crap. Closed for $57. And you know, now it's sitting at 86. That's wild. That's just like, oh, I don't know. Kathy's having a hard time getting a break here. That's a bummer. Nah, okay. What else do we have here? Oh, look, Shift's at $1.02. Sunrun, nice, is holding on to that 6% here. Lucid still at 12%, kind of how we left it yesterday. Wayfair. What happened with Wayfair? I'm gonna find out what happened with Wayfair. Yeah, because Wayfair was rallying on some excitement yesterday. Looking at the checking in here on the pre-market, up about almost 0.25%. So we'll see. Okay, let me go ahead and jump on over to CNBC and let's see what they have to say.
Do you think that makes sense?
Oh, yeah. Jobless claims came in this morning. By the way, still substantially below historical averages. Came in at 260,000.
Midterm.
Yeah. Oh, my friend John Ellis, who does this great newsletter each morning, talked about how if you extrapolated what happened in Kansas, you would definitely think that the Democrats are going to have far better chance than you thought. Now, I think right now, most of the people I've talked to are saying 30 seat sweep in the House. Mm-hmm. Nancy Pelosi says goodbye. The Kansas, which is obviously a referendum on Roe v. Wade, would say otherwise. And I thought it was a very important note. It's the first time I've seen that the Democrats are going to make a real stand on Roe v. Wade, and not everybody is united in its hatred of it in the South.
Yeah. McConnell yesterday saying that the lead in the Senate, whoever gets it, it's going to be pretty thin. Right?
Yeah. So, I mean, if you believe the Republicans are good for stocks, then the Kansas primary was very bad for you.
Yeah. So given that, and given the way we rallied yesterday in the face of all that hawkish Fed speak, Kashkari saying don't count on any cuts next year at all, who's right, the market or these Fed officials?
I mean, I've got a piece of paper in my hand for what I'm looking at, which if you remember the club you get. And everybody's got the way I read it is everybody other than Costco has too much inventory. I mean, I think that if you had to have a metaphor for this moment, it's the abominable the abominable Yeti, where there is inventory everywhere throughout the system, and they miss the number. And we think of Yeti as being something that a couple of years ago, hey, do you have a Yeti? Well, now it's like Yetis everywhere, and you couldn't spot the Yeti in the.
You mean a Sasquatch, something right. You never see.
All right. This is such a weird discussion they're having. Okay, we get it. Inventory's high. All right. Quickly, Wayfair. So Wayfair reported earnings this morning. They reported an adjusted loss per share of $1.94. The estimated loss, so the markets were expecting it to lose, was $1.87. You have Wayfair net revenue of $3.3 billion versus an estimate of $3.2. So they actually beat on revenue slightly. And but they did miss on the bottom line. However, it does also look like they saw a drop in active customers. Sales of luxury businesses are growing well. It says luxury businesses are growing well. Okay. Seeing trade down in various classes in the home category. Makes sense. People are getting squeezed a little bit. Shares extend drop during earnings call, down 9%. Let's see here. Q3 revenue to date implies a full 3Q revenue below second quarter. Oh, okay, the full guide. Okay, got it. So they are guiding lower, and they see negative adjusted EBITDA margin on current revenue. Wow, that's weird. Okay, so that's going to be an earnings call that I kind of want to go through. I wonder if I can get it now. Sometimes I can. Let's see. Wayfair earnings call. Let's see if I get it. Yeah, sometimes when they're on it, it's a little harder to get because the script or the transcripts haven't actually been published yet. But there are ways that you can get the transcripts while they're happening. I yet have not figured out exactly how to do that. But if I can, then we can look right now. Okay, I think I may have figured it out. That was a lot easier than I thought. Oh, it's already over. That's probably why. Okay, so I have it. Now I'm just going to look at, I want to see, let's look at consumer in this. Okay, so tough year ago comps will begin to normalize in the back half. It's unmistakable that the consumer is being impacted by inflationary pressures as well as economic and geopolitical concerns. Consumer demand is developing, and we expect to react accordingly. Not great. Highly confident that our consumer and supplier-focused platform model, coupled with our team's clear-eyed assessment of challenges and opportunities before us, willingness to take action, will only make Wayfair operational and financially stronger. Blah, blah, blah. I mean, that's just a sales pitch. What about pricing? However, pricing is such a big tell, in my opinion. Let's see here. Unlike traditional retailers whose cost basis is way on their pricing decisions and can become a liability in a softening macro, the advantage of our platform model is that by taking minimal inventory risk ourselves, our gross margin can remain resilient. We have the ability to drive our gross margins higher through capturing incremental efficiency. So are they not holding inventory, Wayfair? I mean, I thought they had a bunch of warehouses and it'll almost like Amazon, but maybe I'm wrong. So here's the Wayfair chart right now, down about 8.29%. But I am kind of curious to know how much inventory they do carry. So we can look at their press release and find out. We will do so. Okay. Here we go. So let's see what we have here. 3 months ended June 30th. We have revenue per active customer going up. Orders delivered. Oh, see, orders delivered going down. Oh, wow. Huge decline there. Total number of orders delivered in that period. I think these are per customer. Wow, people ordered that many orders back then? Yeah, per active customer. Oh, interesting. And they view orders as a key indicator of their growth. All right. Anyway, where's the inventory number? So inventory is right here. Wow. Yeah, look at that. They had 69 million in inventory. And now they're at 98. Yeah, that's interesting. So they're almost like a drop shipper then to some degree. Wayfair. So, yeah, I mean, I guess that doesn't necessarily mean all this stuff comes from them. I guess that makes sense. You get a bunch of different designers in here. Like, I doubt they make all these different party bars. Warehouse clearance. What's that? I wonder if it says, though, like, oh, it comes from Wayfair or not. But it's interesting. I mean, obviously it doesn't. Assembly required, specification. It's not going to tell you, is it? Oh, yeah, there you go. About the shop. Oh, it's almost like an Etsy. That makes sense. This is the party bar shop. Party bar online. All right. Well, that makes sense. Okay, so that is interesting. And that is actually a unique advantage. So, but nothing on pricing power. Yeah, they don't mention the word power at all. What about recession? They don't mention recession. Demand is something that we've talked about. Is it? Well, no, we did consumer demand. Okay, let's see. Demand. When demand recovers, direct traffic trends will reverse and drive incremental leverage in advertising. Oh, interesting. Secondly, in softer macro periods, we are unsurprisingly see the volume of free and direct traffic to the site decrease, which will make advertising grow as a percentage of net revenue, though we're still deploying dollars against paid channels efficiently. So there's a temporary phenomenon. Okay, so they're blaming basically what looks like a higher percentage of advertising and less revenues on the fact that less people are just going to their website. Okay, interesting. The only time this model is a disadvantage would be in the back half of the year where there's too little inventory relative to demand, like what happened in 2021, but that basically almost never happens. It's also kind of a good point. If you don't have inventory, then you get screwed in an inventory crunch time, but I don't see that happening again anytime soon. If anything, the oversupply at other companies could be a benefit to warehouse. Oh, here we go. Price elasticity. What's this? The demand response curve is there, and the price elasticity. What second pillar is around? So we talked about this starting a year ago when we talked about being 1,000 basis point runway that could quantify between 4-bit levers, meaning we can grow volume, efficiency, blah, blah, blah. Second pillar was around becoming increasingly exclusive, and we lean on red carpet merchandise. Boy, there's a lot to break apart here. I don't know what all these things are yet at Wayfair. Red carpet merchandising. It's another thing to look into. We have numbers that make us feel good about how we're doing relative to the macro demand, but the truth is macro demand is soft. Yeah, okay. All right, well, I mean, so they're seeing it. Okay, interesting. Hop on over here for a moment, and then we'll check on the sticks in just a sec.
They'll put up what's necessary. We know that the Chinese, look, we're sitting here arguing about the how many ships we have in the Straits versus how many airplanes they're flying over Taiwan. And at the same time, we really trust the Alibaba numbers.
You know, we throw that caveat out there with all things China.
Well, I mean, look, the biggest issue in China that a lot of the tech guys are afraid of is chip blockade. And the Chinese Navy could do a chip blockade out of Taiwan. They have a big enough Navy. So that's not taking over Taiwan, but that's a lot of companies do not need a chip embargo right now. And it's great that we passed this CHIPS Act, but we're not going to be able to put up those foundries for a couple of years.
No, President looks to sign that bill on Tuesday. We'll talk more about that in a bit. We'll get to EVs as well. We mentioned Lucid shares tanking post results. Interesting comments out of Ride today. That stock's going to open up 11. And we'll talk about tomorrow's jobs number and whether claims today are giving us any clues when we come back.
The answer to that is no. Nobody cares about the claims number right now. It's so below historic averages. It just doesn't freaking matter. But what I'm still a little stuck here on Wayfair. I think what bothers me in this environment is the money losing aspect. I mean, their gross profit is there, 900 mil. I mean, it's like Uber losing money as well. The gross profit is there. There's that advertising as a percentage of revenue staying strong. That's what they talked about. They took some impairment. That's fine. But their total operating expenses, even without the impairment, are very, very high. I mean, if your gross profit is 900 million and your operations is about 700 million and just your advertising is nearly 400, you're already upside down. And were you profitable here? Let's see if you were profitable here when your OPEX was lower. You were. So they were profitable in the 3 months, the first 3 months of 2021. But then you wonder how much of this was people buying like second homes and just going kooky, right? And that's where I actually think that number of orders per customer was very interesting. Where was that? It was somewhere over here. Okay. Last 12-month orders was what I'm looking for. Is it here? Yes. Key operating metrics. Active customers, total number of individual customers who have purchased at least once directly from our site during the preceding 12 months. Change in active customers is reported in periods captured both inflow of new customers as well as outflow of existing customers who have not made a purchase in the last 12 months. Okay, fine. So like I haven't bought anything in the last 12 months, so I fall off of that. So their active customer metric is definitely declining. And that's a substantial decline, right? I mean, if you do 24 divided by 31, that's like a 22% decline of active customers. So all those people you spent money to acquire, you're not actually seeing anymore. Then you've got orders delivered. I want to clarify that here. Orders delivered represents the total orders delivered in that period, inclusive of orders that may be returned. It must be per person. I do think that's very interesting, though, that but then again, I don't know if this is per active customer. I feel like it is, but what else would it be? Unless it's orders delivered in terms of like millions of orders delivered. That could be average order value in millions, except LTM net revenue per. Maybe that's how many actually millions of orders, but then wouldn't you'd think they'd have a decimal on that. I'm not exactly sure what orders order delivered. It says total orders delivered in that period. I mean, based on that definition, I think that doesn't mean per customer. Yeah, because then again, it also seems weird that people would be doing like 10 orders on Wayfair per year. I mean, that seems like a lot. Or at some point, 29. That doesn't make sense so much. But that's something I could clarify going into the annual report. Average order value. See, that looks like a per customer thing. But that's also driven up about 10% from inflation, likely. Anyway. All right. Money-losing companies just make me very, very nervous in this environment. Somebody asked in the comments about SoFi. I mean, I hate to say it, but SoFi is also a money-losing company. They have so much money that they spend on labor because they actually do a lot of services. I mean, they've got a ton of financial advisors. I mean, they're really trying to become like a full bank where it's just like, oh, you need financial advice? Here you go. Talk to Joe. Oh, you need high yield savings? Okay, Sally will help you. You know, it's pretty incredible. They do a lot of things. Oh yeah. So what's my opinion on creating a position? I probably won't create a position in anything that's losing money just in this market. There are too many other companies that are at this point, in my opinion, have great opportunities. Like I'd rather buy, like even Amazon. Technically, Amazon lost money because of their impairment, but I'd rather buy Amazon. Amazon's done great since earnings. So here's your Amazon. Amazon, yeah, here are the earnings. Nice pop on earnings. And it's really been consistently up since then. But it's also moving with the market. But I would keep some dry powder in this market, like something. Yeah, I'm like 5%. But just in case we do end up getting any kind of W recovery. So we go to the NASDAQ here. It's entirely possible that with this sort of rally, that this rally ends up seeing another kind of V-shape down. Remember, I drew this over here, expecting a V-shape. See? Look at this. This was the March rally. And I'm like, hey, like, this is crazy. We're going a little wild right now. Like, it would make sense to retrace down and then maybe pop back up. Well, we did. The problem is we went down way more than expected. But that'll happen again here. It's just a matter of like, are we going to retrace all the way up to 61.8 and then go back down to the yellow line, or are we going to, get rejected here soon? Maybe off before even crossing 50 and then come back down to. Then it's a question: is it 23? Is it 0? Or are we going to break that 0 again? I don't know. It's all happened before this year. There's no right answer this year.
So I don't know. I mean, they're going to win. The Fed always wins. I don't care whether they're late, they're early, they're winners. And the last thing to roll over are the rich people. And I'm trying to figure out, for instance, is travel not that high for the rich people because every time you go, your plane is canceled. But rich people are still spending. But they don't have as much that they can buy because they can go buy Lamborghinis. They're $450,000 a pop. They're very nice.
Ferrari's results would argue they're still in. Yeah,
it's great. You can test drive a Lamborghini and go 180 miles an hour in Modena, but you also have to buy it.
We'll watch that. Obviously, oil's a huge part of the story today. We'll get Kramer's Mad Dash. We'll count down to the opening bell. Still got to get to a bunch of results on this last big push. Datadog, Cigna, Kellogg. I know Jim wants to talk some Lilly. We'll do it in the opening bells in 10 minutes. Don't go away.
Your shipping manager left to find.
I wouldn't mind actually taking a peek at Kellogg. Kellogg is very interesting, mostly because I want to see if they say anything about pricing power. So Kellogg, and they also see, I mean, the expectation is that the poorer consumer, lower income household consumers is going to have some pain. But let's see here. Any headlines on them? So they reported with net sales of 3.86. That's a beat compared to the 3.64 expected. Adjusted EPS 1.18 versus 1.05. Full year guidance after strong first half was raised. So they raised their guidance. Okay. Boost revenue guidance amid momentum for snacks and noodles. What? Snacks and noodles? That's it, folks. All in on Kellogg. The snacks and noodles are going to the moon. It's an interesting headline. Let me see if I can get the Kellogg transcript. And we can also dig into that a little bit. While second quarter results. Okay, while I hunt. Oh, I don't know that their earnings call has started yet, but I'll find out. While this goes on, let's take a minute and see what Bloomberg has to say for themselves today. All right. I like listening to the different channels. I think that's one of the things I realized in Germany. I'm like, man, I'm driving. Like, I can't keep changing the channels. If somebody could just change the channels for me. And then I'm like, oh, wow, I used to do that. Let's listen in.
Result is phenomenal.
Oops.
Well, there are a number of instances of strong demand, particularly in the US. And in fact, there was a back of the envelope calculation from the Federal Reserve in the middle of July produced to say that demand, because of fiscal spending during the pandemic, it reduced US inflation by something like 2.5 percentage points, really quite significant and more than elsewhere. So we know that we had excess demand. The Fed can't control the supply side problems. It can control the demand. It's going to bring down demand. And yeah, okay, it would rather people remain in their jobs and job openings reduce. But the reality is that it can't fine tune the economy like that. The reality is that it will make the labor market worse. And that's part of the pass through of monetary policy to slow the economy, to bring equilibrium in supply and demand down to a lower price level, to bring inflation down. So inevitably, I think, and purposely, the job market will loosen in the coming months.
Jane Foley, Troy Garsky, to the both of you, thank you. Coming up on this programme, the morning calls, and later, from Bernstein to Goldman, sounded the alarm on the recent equity rally. How many banks are doing that right now? Chris Harvey of Wells Fargo is going to join us in about 7 minutes' time. Looking forward to that. It's just around the corner.
Yeah, all the suits are complaining. the Wall Street suits, not the Kevin suit. Let's see what else we have here. Yield curve inversion deepens.
P Global had a PMI for services. It's terrible. We ignored that. We focused on ISM services, which was great. Why is that, Jane?
Sometimes the market sees what it wants to see, and then certainly if the market was, in the appetite for buying a little bit of risk, then it would have probably focused on that. But ultimately, I think the data will come out in the wash. Everything that is in there will eventually run through. And I think, generally speaking, if we step back, the market is looking ahead to slower growth for the US into next year, and of course weaker growth globally as well. From China, from the Eurozone, and certainly, of course, from the UK. So, this is not an infrequent thing to happen. The market focusing on what it wants to see, but again, it's part of perhaps a short-term outlook rather than looking in the big picture.
All right, so let's take a look at the stakes. It just got a little ping here that S&P went negative. QQQ sitting up 0.08. Wayfair down down 8%. Yeah, S&P is barely negative, but they've kind of been flat, so I don't know that that's really that big of a deal. Something crazy must be happening over at Coinbase, because it's had a huge surge of volume, It's up 28% right now. Let's see what's going on here. Huge pre-market volume just flew into coin. Let's find out. Coinbase. Coinbase. I mean, this was yesterday. They had the BlackRock partnership, but no, there's nothing here. I mean, Citron Research 15 minutes ago tweeted coin huge valuation or validation, just shot down many bear cases on that. Up over 20% yesterday with Bitcoin flat. There's no news. I mean, it's like going nutso here. Keep in mind, this is pre-market. So, you know, if somebody came in here and it looks like bought somewhere around 30,000 shares, and that kind of started some of this. Is this Kathy rebuying? I mean, usually you don't get the institutions buying pre-market. Yeah, I mean the deal between Coinbase and BlackRock, but that's old news. Like, we've already known about that. So like, it's not like that news just suddenly broke. Like, when I was up at 4:30, I knew about that. That was BlackRock partnering with Coinbase to make it easier for institutional investors to manage and trade Bitcoin. Top clients will be able to use BlackRock's investment management system to oversee their exposure to Bitcoin. Move underscores Wall Street's traditional financial partners are expanding deeper into crypto and related technologies. Coinbase is facing probes, blah, 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 blah. This news literally has been out since here. And look, the market did nothing. The market gave no interest at all. This to me looks like, you know, I mean, I hate to say it, but retail, like having an orgasm. I'm just like, oh my God, our stock's going up. It's going back to the moon, which is fine. Like, hey, I want people to make money. I mean, I'm all for it, but there's no catalyst other than it's going up, which sometimes it's the best catalyst. Well, it's going up. Best short-term catalyst, at least. Anyway, let's see how it opens up. It opens up in less than 2 minutes here. So let's get some suspenseful music. It's still up there. It's so nutty. Let's see if there's any other news. No news still. Just a lot of euphoria. Sometimes I feel like institutions do this to like purposefully screw retail, you know? Like prop it up and then watch them dump at the open. I mean, maybe not. I don't know. And I don't want that. I mean, I want people to make money, please. But it don't make sense. All right. 30 seconds to open. QQQ goes negative. Tesla is positive 1.3. You've got Lucid Group still down 12%. Skills down 10.5. And Lordstown Motors coming up 9.9. Alibaba up 7. Robinhood up another almost 7 here. AMC up about 3. 10 seconds to go.
At the NASDAQ, it's Latin America's first fully integrated platform, Semantics, ringing the opening bell. Jim, Coinbase is going to open up 30 plus.
All right, well, Larry Fink at BlackRock and his Aladdin system technology, leaders in both thought leaders and technology in the fund business. Coinbase, an outfit that the SEC has repeatedly told me, let me put it said publicly, has a 24% short position.
Holding.
And voila, you team those two up and you have Coinbase up 24. It can be up 34. I mean, the short position is that big. Short position is that big.
Today, Citi names it their upside.
All right. Well, yeah. There's Coinbase. It's holding in the first minute here. I mean, it's shocking. Really, really incredible. Coinbase absolutely holding. Someone here says Amazon is having a little bit of. Oh, I mean, it's just a little bit of a tick here. It looks like Tesla would have ticked down. Yeah, Tesla's ticking down. Wayfair is ticking up. Coinbase now up almost 40%. Oh my gosh. This is incredible. Wow. That's really cool. I mean, the fact that it's holding at open now is so huge. I mean, that's huge because look at this. The volumes went from 40 to 30,000 to 200,000 to literally 5 million at the opening minute. Now we're at 1 million. I mean, the volumes are seriously here. And if this was just a pre-market pump, we wouldn't see this. I mean, this is incredible. Somebody decided to really go big on a position over here, and it led to some. I mean, people are apparently waking up. They're like, "Oh my God, we gotta get back into Coinbase, quick! We've been sitting on the sidelines with cash for too long. Deploy, fire." Anyway. Wayfair back down to 7% to the downside. eBay down 7%. Lucid down 11%. Skills down 15%. Zillow's down about 2.5%. CrowdStrike down 3%. Open Door about 5% to the downside. They have earnings today. I'm not sure. I know they're dropping off the cliff here at the opening. I think they report after, but I'm going to double check. Let's see what we got for earnings for Open Door. Pre-market, we had Alibaba. Yeah, no, they're going to be after. After we have Square, AMC, Beyond, Open Doors after. Yeah, Rocket Mortgage. Okay. So they're rotating down leading into earnings. What insanity. Holy crap. Look at that. Wow, 44% now. And it's leading Robinhood to skyrocket as well. Robinhood now up 9.3%. Wow, geez. You got Embraer coming back a little bit as well, 4.5% over here. Okay, here's the crazy mode. Crazy mode. All right. Well, I will keep looking for some news here. But I don't see, other than the BlackRock, we have not seen anything. Let's see what CNBC has to say about it.
And that's not Vlad's fault. What people are in really got crushed during this era. They're in the SPACs, they're in the options, all the stuff that we now sit there and say, wow, that was part of an amazing bear market. It's almost like that's where a lot of people were. And they're trying to develop retirement products. They're trying to get beyond the notion that they're gunners. And I think they can do that, but it's a really tough environment to do that. Because a lot of people don't feel, a lot of people left this market. They lost a lot of money. I mean, Gina Francola, who was so good for us, put together some figures for me about how you've done it in SPACs. I mean, it's really rather incredible.
The only thing that I'm finding, by the way, is that it's the BlackRock partnership. It's just weird because we've known about that for over an hour and we just get the spike. I mean, it just goes to show that someone woke up and is like, oh, wait a minute, this is a good thing. Oh, well.
Has a message to the bears. It's too early. This is what he's got to say. We do not expect to retest the lows until the first half of 23. Fed expectations toggling down, the lower cost of capital and second quarter earnings clarity has raised the equity market floor. First half of 23 may be tough for stocks. He goes on to say we may see operating margins collapse and exhausting consumer and the job picture turning for certain. Chris, I'm pleased to say, joins us right now. Chris, let's start there, buddy. And it's great to catch up with you, sir. Why do you think the bears are too early?
Well, again, it's exactly what we said, right? Your cost of capital is down. We're through earnings. Earnings, even for us, as we look at margins, we expected margins to to not be as strong as they were. And strong is the wrong word. We expected more compression. You didn't get it. But more importantly, the thing that we always talked about, the thing that we hung our hat on, it wasn't about a valuation. It wasn't about a level. It was about the Fed. And when the Fed was going to toggle things down, what we said and what we believe is equity market can sustain gains and equity market prices can go higher. And that's what we're seeing. And the last thing you touched on, and a few of the commentators touched on it, we are now in a growth market. Rates are coming down. That's really positive for growth and for the market in general, because the S&P is a long duration asset.
Chris, can that continue to work with inflation close to 9%?
All right, John. So let's talk about break evens. Let's talk about inflation, and let's talk about what's happened over the last year. A year ago, we said this very loudly on the show a number of times. Last year at this point in time, I had never seen a pricing environment the way I had seen it last year. Everyone was raising prices, and the consumer was just price unconscious. Now we're seeing a consumer that is no longer price unconscious. They are making decisions, and they are changing their behavior. More so, if we look at break evens.
Did Coinbase just get halted?
Right across maturities have come down significantly. So the market's saying that cyclical component to inflation is coming down. If we look at some of the components in ISM recently, they've come off the boil. What we haven't seen is CPI. CPI is still running hot. We'll see. We get CPI a little less than a week from now. But ultimately, what we're seeing is inflation come down, and we should expect inflation to come down. It will be sticky. There are geopolitical reasons why it won't get to levels that we've seen in the past. But ultimately, we're late in the cycle. The economy is slowing. Demand is slowing down, and the consumer's behavior is changing. So again, expect to see inflation come down. It'll be a little bit tricky with CPI. We'll see what happens. But ultimately, all the factors you need to see are occurring. And so we're in a much different camp with inflation today than we were a year ago.
Chris, help me out with the timing of this. And as you know better than most, the timing of anything is the most difficult part of the call. When do I start to transition away from what's working now towards what you're anticipating in the first half of next year?
Yeah. So John, what we said at the beginning of the year, we thought the first half of 2022 was going to be about defensives and cyclicality, reopening. In June, but we also said by the second half of this year, we're going to go into a growth market. We're in that growth market. In June, we downgraded cyclicality. And what we're telling clients is you really need to rinse the portfolio from cyclicality. What we're seeing on the value side is we're seeing what I consider a lot of value traps. Companies trading at mid-single digit earnings, okay? Whenever I've seen this that late in the cycle, what that is the market telling us those earnings that you see today are not going to exist in 6, 12, 18 months. You're going to get multiple expansion, but not the kind you like. So I think we're in a growth market. I think we'll stay in a growth market, but you also have to manage your risk. And there are parts of the low volume defensive sector that we do like, and you want a barbell growth with something either better balance sheets or a little less volatility.
Chris, I don't know what to do with discretionary. Can you tell me what to do with discretionary? I hear everybody talking about a bear market, a recession, and there we are ripping 25% off the June lows. And Chris, I just scratched my head at that. What are we doing?
Yeah, it's a good question because we're looking at that right now. We've been underweight retail for some time. That's worked very well, but you are seeing a balance. And we just looked at the performance of staples versus discretionary. And staples obviously have ripped over the last 6, 12 months versus discretionary. Right? And what we're seeing, getting back to margins, what we're seeing on the staple side, that's the area where we're seeing real margin pressure, right? And staples, discretionary looks like maybe it's in the bottoming process, maybe it beat the rush. So it's worth a look. We're not sure just yet, but we're going to do a lot more work in the space because prices have really turned, and multiples in some cases are trading at recessionary levels.
Someone's doing more than looking. They're buying tons of it, apparently. Chris, it's good to catch up. You're going to stick with us, I know. We're going to talk about some layoffs potentially in corporate America. Consumer discretionary right now up another third of 1%, leading the gains this morning. The S&P down by a little more than 1/10 of 1%. On the downside, as you might expect, it's energy down 2%, given the moves we're seeing in crude. When was the last time we talked about the 80s on WTI? We can do that right now. $89 a barrel on WTI, down 1.4% on the session. Coming up, investors gearing up for payrolls as corporate America continues shrinking its workforce.
Even though the economy is slowing down, we still have a really tight labor market, and there's still more jobs out there.
Yeah, we've heard that argument over and over and over again. So Coinbase is halted. we are kind of curious to see what happens here. But I tell you, I think some institutional manager woke up and is like, oh, Coinbase, BlackRock, buy. I mean, that's like the only explanation. But boy, oh boy, it's holding. And the fact that it's holding through open really goes to show that, that sort of reiteration on the deal by somebody with lots of money is not leading to any more selling pressure. If anything, it's probably short covering, and that's leading to more
Buy.
oh gosh.
Years fleeing from Meta and going to Google. On every one of those conference calls, for the the tech titans, as they call them at ANET, is just they're just not hiring. And that means they're leaving a lot of jobs opening. And I think that what that means is that that's where you had the big job hop and wage increases in engineers. Remember, I told you it's a white collar recession. It's a white collar recession. And Arista Networks.
Adam here mentions, talk to somebody who works at a shipyard this morning. They shut down due to a shortage in diesel. That's crazy.
Very strong, but they don't need more people. They just need more computer power. It's kind of like when we have Bill McDermott on from ServiceNow.
Exactly right. Or anything Nadella says about technology and inflation.
Yeah, thank you. Nadella is a guy that clearly recognizes that they don't need more people. Those guys all had dreams. I mean, it's like, by the way, Meta. I mean, people used to post like mad, okay? Now not posting a lot. So they got to find something. TikTok is crushing. I felt that Reels had a good $1 billion run rate, but TikTok is crushing them. And when I have a feeling that when we see the TikTok numbers, we're going to say, unless somehow that we can say that you're a Manchurian candidate if you watch TikTok, wow, their numbers are going to be the best in show.
Yeah, it's interesting you mentioned Meta because we are getting official word today about their bond market debut.
Yes,
a 4-part offer. One of the few S&P companies with no debt.
I know they have a chance. My Chalbertrus owns it, but I did say last week I bet on the jockey, not the horse. I don't think that the metaverse, which is a really good thing, is being picked up the way I thought it would.
Well, that's because it's not a good thing. The metaverse sucks. The metaverse is stupid. Look, I don't know about you. Everybody's different, okay? But I will show you the version of the metaverse that I had the pleasure of looking at yesterday. And it is the best version of the metaverse to ever have existed. I got to find it. Let's see. Where is it? Oh, here we go. Okay. It was this right here. That button. I gotta make sure I hit the right button. Is this the World of Warcraft Burning Crusade midnight launch in LA? I was at the midnight launch in LA. Now, while I'm not in this video, this is like the best version of the metaverse, in my opinion. It's when like people are like so freaking gung-ho about a game coming out, 8 million people playing this game at that time, that they're like, oh yeah, we're gonna go line up outside of stores at midnight to make sure we can get our game so we can go be our, shamans running over a hill. And look at that, EB Games still existed then. That to me is the best version of the metaverse because it's like really good game, amazing community, growing population, and like, you really felt like you were part of something bigger than yourself. Like, that's awesome. In the future, that will be in virtual reality. But folks, it ain't the metaverse. It's a video game. I do think that there will in the future be the benefit of having like, oh, the appraiser needs to come look at my house. Here, enter my Matterport scanned version of my house, and you're sort of in the metaverse, but I don't actually know that you need to be in it and kind of walking around it. Be kind of cool though. I mean, like, I'd like to show homes in the metaverse. Like, I think there's some functionality to that. I'd like to see homes in the metaverse because if somebody could take a home and put it in the metaverse, and I could put on like a 3D headset or whatever and like walk around that home, that's cool. That's a lot better of an experience than having to go drive there and go there and all that kind of stuff. But is it really that different than just having a 3D scan that I quickly mouse around with my phone? I don't think so. But, whatever. EB Games still exists in Australia? Oh, I thought they got bought out over here. I don't know. Anyway, okay. Let's take a peek at the sticks again. Let's see here. Let's see if Coinbase is back. Okay, Coinbase now dropping after the halt. Leave it to the Wall Street suits. Damn Wall Street suits. Halting us again, stopping the squeeze. Hey, look, I mean, I want to see Coinbase succeed. I want to see people make money. I lost a lot of faith in Coinbase and money when they lost their ability to lend. When the SEC really cracked down on their lending ability, which the SEC was probably right to do, because we saw a lot of disaster come out of the lending world. So maybe in some way that was meant to be. Sometimes bad things are like, well, that was meant to be. Like little things that just nudge you in the right direction. Sometimes we think things are so terrible when they happen to us, and it's like, no, this was actually like perfect. That was supposed to happen. It's all part of the story. Maybe it's all pre-scripted. I don't know. Anyway, look at Open Door down 7.8% or 7.5% here, going into earnings later in the day. After hours, they will be reporting. Ooh. Anyway, definitely one I'm paying attention to, because my company that we're launching has a big target on Open Door to end Open Door. No, we don't want to see people go bankrupt. Yes, we do. No, we don't. That's terrible. No, always good, healthy competition. It's a good thing. So Coinbase now up about 21%. Lordstown Motors up 20. It makes me wonder what's going on with Lordstown Motors. I'm going to take a peek at that. Roku moving up about 7.5% here. Let's see how the Nasdaq's moving as well. Ooh, Lemonade. It's at $23. QQQ is sitting at almost 0.5% up right now. Tesla almost up 2%. Getting some pretty incredible moves here. Let's see if SoFi is moving today. SoFi's still moving up today. Very nice. Amazon up 1%. Apple had a 4% day yesterday, and it's up another almost 0.5% right now. Gonna close the door on Open Door. Oh, that's... I gotta write that one down. Close the door. Okay, anyway. That's so bad. So... Ride. I got to figure out what's going on with Ride. I will do so.
And the 2023 estimates, put up that next full screen, are lower than 2022. And that's really why oil stocks have been selling off. What are they buying? Well, they're buying tech. Since this moment has happened in mid-June, with all the oil stocks notably down, all the big cap tech stocks like Apple, Nvidia, AMD are notably up. So it's growth over value. Energy tends to be value, and less interest even in defensive names like consumer staples. As for today, this is really the last big day of earnings season. And the key story here is not nearly as bad as was feared 2 months ago when we had that big drop in June. Q2 numbers have been going up. Q3 and Q4, as I've been pointing out, are slightly lower. They were in the mid-8s a few weeks ago. Now they're in the low 7s. Possibly they could go into the high 6s, but no earnings recession. And remember, Carl, we keep repeating this over and over again. When you go into a recession, almost invariably, earnings go down, even in a mild recession, 10 to 20%. The market, at least now, with the guidance we've got, is not signaling any kind of recession like that. Carl, back to you.
Yeah, that's a big risk factor. Definitely a big risk factor. So regarding Lordstown Motors, cash balance of $236 million extends the runway for them. Reaffirms Q3 target for the start of commercial production. Lordstown expects lower second half total operating loss and Q3 production target, right, for the Endurance. Second quarter EPS 32 cents. Oh, interesting. Operating income of $61.3 million. They were expecting to lose $87.4 million. How interesting. So I mean, going from an expected loss to a profit, that's pretty big. That's great. That's great news for Lordstown Motors. And clearly it's being rewarded by the market right now. So Lordstown Motors presently up 25%. Here's a company I think people were basically pricing bankruptcy in, and now up 25% on these earnings here. That is absolutely phenomenal. I mean, look at we started the day at $3, 3.1 bucks. We're now sitting at 369. Really incredible. Coinbase holding on to that $100, not as high as the 40% that we saw during the opening run, but definitely moving here. Yeah, someone here writes a comment. Raphael writes a comment. Matterport up almost 40% for the month. Yeah, I had a little straddle on Matterport. But wow, yeah, look at this. We're at almost $5 now. How incredible. What a nice move there on Matterport. Matterport's still expecting loss throughout the year, unfortunately. So then we've got, let's see, Lucid, Open Door down still 9% now, continuing to rotate down. Lucid recovering a little bit. Tupperware down 13%. Had a crazy run the other day, too. Coinbase holding on to that 24%. Workhorse coming up 8%, probably moving with sympathy for Lordstown Motors on that 25% move. Robinhood still up 5%. Embraer 4.7. MGM 4. It's Matterport over at the 3% range. Arcimoto, Canoe, these guys moving a couple percent. GameStop moving 2.3%. Wynn Resorts 1.8. Tesla 1.58. And BTC sitting at 23K. Ethereum 1640. All right. Let's see what Bloomberg has to say. All right. QAnon.
Where things start to change in a more material way from him and a team, at least. That's their view. Equities unchanged on the S&P. The Nasdaq's still doing its thing, up about 1/3 of 1%. Maybe we should consider, and I've raised this a couple of times over the last week, that Marko Kolanovic over at JP Morgan might be right now. He's having his time in the sun. He said this earlier this week: whether it's earnings or the Fed, we see a reset of investor expectations. Risk markets are rallying despite some disappointing data releases, indicating bad news was already anticipated, priced in. He's been looking for a big recovery in stocks. We've had one off the lows, that's for sure. BNP Paribas said something that stuck with me all week on crowding in. With the Fed laying the foundation for a more moderate approach in the back half of the year alongside resilient earnings, we see scope for further upside in the near term as market participants get crowded in. That was BNP. And then Max Kettner this morning of HSBC, joining the rest of them, basically just saying wishful thinking. I think that was the title of the note from him and the team at HSBC. Wishful thinking. You get to pick your side. Right now, we're basically unchanged on the S&P. Coming up, the market moving events you need to be watching. Your trading diary just around the corner.
Nice. Thanks so much. Here we got a comment. Good to have you back in my routine. Courses are definitely investments I have my eye on. Oh, well, thank you for that. Love to see you there. Some awesome insights in there. A lot of folks really right now, we're seeing a big pickup in folks interested in the real estate ones, mostly because we're starting to see that real estate cycle rotate, and real estate's pretty overwhelming for a lot of people. I think the best place for people to start, we've got the coupon Series A link below. I think the best place for people to start is the Zero to Millionaire. Real estate investing is a really good opportunity because it really takes this decades of experience, not just for myself, but also family members in real estate, property management, tenants, rental renovations, design choices, repair choices, discounts, whatever. The goal is to figure out how can you be the best landlord. And that has such a bad reputation these days, but it's very, very capitalistic to be landlords and have landlords and ultimately to become a landlord. And the best thing that you could do is become a landlord. And I think the easiest way to do that is by starting with your own home. I don't know. For some reason, people really want to delay owning real estate. And I think it's a terrible idea. I think owning real estate is phenomenal. And it's almost a certain way to build substantial wealth. Obviously, I can't guarantee it, but okay. So let's keep looking here at what we got going on with the sticks. Coinbase rotating down again. Now it's sitting at $98. So a little bit of a softening there, but still an incredible boost. And Coinbase is up almost double in just the last 3 weeks here or so. Don't bet against America. That's right, Don Allen. Absolutely. So Coinbase, 21%. Lordstown Motors sitting at 19. A little bit of softness there after we last checked in when they were up about 25%. XL Fleet sitting up about 9%. Carvana, 5. Thoughts on the 10-year Treasury? Yeah, very good question. It's actually something I wanted to talk about in a video. So the 10-year Treasury, from a technician point of view, formed a very, very clear head and shoulders. And that's a sign that 10-year has a really good shot of heading lower. But in the short term, anything can happen. We get a CPI miss, this thing's going to get wrecked. It's going to go right up. But I'll show you that pattern in just one moment. It is quite remarkable, though. So, okay, come on. So Apple did this thing that is so weird. They now have, that is so bizarre. So I have a computer here, here, and here, and they're not connected at all, or at least I thought they weren't. And if I put my mouse into the corner of one of them, it goes to like the iPad. It moves over, and like I didn't connect them. It's like some new weird little sticky feature they got. It's quite interesting / bizarre because I need my corners. Anyway, so here is the 10-year Treasury. And so what you can pretty clearly see here is we'll draw it. You clearly have a head and shoulders here when you look here and here and here, right? So you've got this really clear head and shoulders pattern, which a technician will say, well, Kevin, it's obvious. Head and shoulders means you expect this. So we'll see if we see that breakdown. Bank of America has a target at 2% for the 10-year. Any movement to the upside, though, is something that is going to create pressure on real estate. I think there's a higher likelihood that we actually stay like this, that we kind of just trade sideways. But I'm fighting the technical on that. Oh, it's called Universal Controller. No, it's not Sidecar. I know Sidecar. I used to use Sidecar, but that's when you have to like manually go in with Bluetooth and connect it, unless they updated it. I don't know. Maybe they do call it Sidecar now. But whatever it is, it's weird because I don't know that I like. Here, I'm on my laptop now. I'm gonna move the mouse. Oh, that is so weird. Oh, you can't even see the pointer. Oh, that is so weird. Anyway, very weird. So you figure out how to turn that thing off. Okay. So what else we got? Let's see here. We're coming up on 7. And everyone's on commercial at 7. That's fine. Let's see if there's any economic news, though, that we got to pay attention to. All right, here we go. So any economic releases coming out in the next minute? We have today being the 4th. Jobless claims we got. And nope. Nothing coming out at 7 today. Yes, if the 10-year moves down, that does mean a downward pressure on mortgage rates, yes. Taiwan. Government will ensure economy and financial markets are normal and stable. Calls on the international community to support. We will dedicate ourselves to protecting the status quo of peace and stability. Norway's King Harald is hospitalized with a fever. Stable condition at the palace. Well, he's not hospitalized at the palace. It's from the palace. But anyway, I didn't know they still had kings in Norway. All right. Anyway. Urges Taiwanese people to stay on high alert as China will intensify its information war against Taiwan in the next few days. Yeah. Huh. All right. Okay. So let's go back to the sticks here. All the channels are on commercial. Voyager Digital popping off a little bit at the moment. I don't know if this is because of like sympathy on Coinbase here, but up about 27.5%. I actually have some cash with Voyager. Thank goodness it's not USDC. I've mentioned many times on the channel that I'm dumping all my stable coins, and I did, thankfully. And so I had cash over in Voyager, which is trapped right now. But they expect through bankruptcy that people who had cash with them to get all their cash back, which makes sense. Never guaranteed, but that's exciting. Okay. What else we have here? Coinbase sitting at 97 now. Backed moving up on these crypto moves here, 12%. How's our overall market? Tesla's still sitting at 1.5. Tesla's been really interesting. It's been very like nominally kind of moving. I don't know if Voyager has FDIC. But that's a good question. That would be worth looking into. Because usually if you have cash deposits, you do have some form of protection like that. But with the crypto brokerages, I don't know. Anyway, CrowdStrike down about 4.7. Booking Holdings down 3.3. Beyond Meat down 3.5. Open Door down 9. Okay, so what else we got here? Let's listen over here.
Flat growth in revenue for the first time in its history. Our Eunice Yoon is live in Beijing and has a lot more on the quarter, as well as how some of the lockdowns did impact results. Hi, Eunice.
Hey, Carl. Well, COVID testing sites like the one behind me, as well as other controls, weighed on Alibaba's business in the quarter, but they did ease up a bit in June. The revenues stagnated, net income halved. A lot of that is because of the weakened consumption, especially in the April to May period when the lockdowns were the most severe. Also, of course, the economic uncertainty and people concerned about not having jobs. Chairman Daniel Zhang says that the company saw signs of recovery since June as logistics and the supply chain situation has gradually improved. Still, Alibaba has other challenges, and that was also reflected in the numbers, especially when it came to a tight government regulation, a customer management revenue. This is revenue that Alibaba derives from selling services to the merchants, really important to the business. It was down 10% year on year as the company looked to fall more in line with what Beijing wants. Cloud computing revenue, this is one of the fastest growing areas of the business. It was up 10%, but that's still slower than the previous 2 quarters, again, because the regulation has been squeezing some of the industries like online education, where there are a lot of customers, or at least there were, of Alibaba's cloud computing. Now, going forward, Alibaba also has a lot of other big question marks. Of course, exactly what's going to happen with its listing in New York now that it's added on one of those on the SEC's lists of companies that could potentially have to delist. The company has said that it was going to strive to make sure that it was able to maintain that listing and also pursue a primary listing now in Hong Kong. Guys?
Alibaba shares up about 9%. Eunice, I did notice that this is the first quarter the company is not disclosing total active buyers, but it is revealing the number of VIP users, 25 million. I'm just curious what you make of that.
Thanks for that, Brian.
I think at this point, Alibaba is going to try to disclose information that it believes is going to be putting its best foot forward. Because at this point, the fact that the revenues were flat, even though it beat expectations, still a big blow for Alibaba, which had been just at quarter after quarter really been seen as a company that's able to boost its numbers.
Got it. Stock up 3.5%. Eunice, thanks. Let's turn to Walmart now, announcing corporate layoffs about a week after slashing its outlook amid concerns of excess inventory. Courtney Reagan has that story for us. Courtney, good morning.
Hi, good morning, Seema. Yeah, so Walmart is the latest large company
we
to
talked
announce
about these layoffs
really
already.
the first major retail.
Okay, so interesting. Tagged you with a link in the crypto chat channel on Discord. Apparently no FDIC. The Fed told them to stop claiming they were FDIC. Oh man. What a disaster. Anyway, at least presently, based on bankruptcy hearings, the expectation is that people get their cash back. We'll see. What would you say to someone that is not in the market and doesn't know much about it? How would you convince them that investing your money is the best option in the long term? You know, that's very difficult because a lot of folks have this impression that markets are rigged and that you can't make money and you have to be, an institutional investor or whatever. Really, I think the easiest way for people to somewhat get their feet wet is by nibbling into a basket of index funds and real estate. Most important is real estate. And they really have to see that when you put 5% down on a house and it goes up 5%, you've basically made your money back, right? And then the rest is just tendies. So like real estate is probably the easiest way in simple terms to show how wonderful investing is. And then if you could, over time rent that place out for a profit, and you look at the fact that now your tenant is paying down principal for you, above and beyond your expenses, there's wonderful reasons to be an investor, but it does take a long time. It's not intuitive to take your cash and give it away. I know a lot of people, people who are, quite educated and have great professions and they just leave everything in cash. They get stock options, they sell right away. It's like, nope, I will not be invested in the markets. And that's fine. If you don't want to be in the markets, at least do real estate. That's something tangible that you can really handle. I got your tag here in Discord. Thank you for that. But anyway, look, folks, if any of you want to chat it up or leave comments or whatever, once these things close, make sure to go to metkevin.com/chat. You could tag me there for free, and we can chat there. I pop in there as much as I can. And if you haven't yet, consider joining the courses. The course member live stream will be in less than 3 hours, and we'll be doing some fundies. We're also going to be doing some real estate analysis today, so we'll be catching up a little bit on those. Thanks so much for being here. We'll see you soon.